This is the Equity Management Academy weekly podcast for mean reversion trading for February the 3rd, 2022. In today's financial markets, fear is the common motivator. Summary. The headlines today are related to inflation. Eurozone inflation hit new record highs of 5.1%, putting pressure on central banks to raise rates. The markets are being affected. It is forcing many investors to liquidate their position as a result of margin calls. The markets today are providing some incredible bargains. Fundamentals. Meta, old Facebook, is down about 25%. Amazon is down 6.4%. Facebook is down 25%. We have a massive liquidation, particularly in tech stocks. The tech stock decline is affecting everything across the board, including gold and silver. Gold is down $18 and silver is down 63 cents. These are fast markets to the downside for many assets. The markets today are providing some incredible bargains. We continue to add on the lows to our core long positions in gold, silver, and Bitcoin. The headlines today are related to inflation. Eurozone inflation hit new record highs of 5.1%, putting pressure on central banks to raise rates. The cost of living in Europe is rising fast. A sharp drop to 4.4% was expected. The euro jumped to new highs against the dollar. This will create some hawkish talk from the European Central Bank about inflation. The markets are being affected. It is forcing many investors to liquidate their position as a result of margin calls. In NASDAQ and other markets, this is an incredible fire sale. If you want to get back into tech stocks, this is where you go in and you add to your position. In relation to inflation and hawkish talk, it is all short term. It feels like the peak of the inflationary fears that we currently have. You have to factor in that world debt is at 130% plus of global GDP. Raising rates will only make things worse. On the other hand, they raise rates because of inflation, but on the other hand, governments have to borrow money to pay for their debt at new, higher rates. One is inflationary, the other one is deflationary. If interest rates rise fast, they will cause massive distortion in the yield curve and widespread defaults around the world. It is really a difficult place to be. If you're a central banker, Patrick MontesDeOca, CEO of the Equity Management Academy, said, all they can do is talk and create fear in the markets, which is what they're doing. Do not let this fear prevent you from seeing reality. If interest rates go up sharply, you can see what happens. Even just hawkish talk about raising rates causes major drops in assets. Look at such pullbacks as opportunities to buy. If they do raise rates, they will have to lower rates immediately or create more stimulus, which is chipping away at the purchasing power of the US dollar, euro, or any other currency. Silver. We use the variable changing price momentum indicator, VCPMI, to technically analyze the markets. Silver made a low of 2202. We are at a major blue level according to the VCPMI. For the daily signals, the market is below the buy 2 level, which means it is extremely oversold. The weekly and daily numbers down to 2164 are in a blue area, major support, where inventory should start to come into the market. We should begin to see support and demand. We are oversold in a major area of support, Equity Management Academy CEO Patrick MontesDeOca said. If you're a day trader, you should not have a position right now. You are looking for the price to cross any of the VCPMI pivot points. down to the weekly signal of 2164 or coming back up above 2226. The algorithm in the VCPMI sees that the lower the market goes, the higher the probability the buyers will start to come back into the market. Gold. Gold is similar to silver today. We are in an alert mode, either to come down to 1787, which is the daily number, or it may revert back above 1810, which is the weekly and daily average. By doing so, it activated a bearish price momentum and met the target. Right now, it is in a neutral zone. Already, gold is starting to see some demand come into the market. We recommend continuing to hedge with dust if you have dust. We recommend taking profits at about 2045. The market appears to be fitting the cyclical pattern. We are looking for a rally after a correction down to 1780 or 1800. We are continuing to add to our core long position on these new lows. Gold has hit a buy trigger at 1800. We are buying gold. We are beginning to see the kind of reversion that the VCPMI is predicting, regardless of the news. Cover your shorts and start to look to buy triggers. If you are day trading, the initial targets are 1805, where you can begin to unload some of the profits. The weekly target is 1810. Bitcoin. We are below the weekly average of 36,510. We are in a choppy area. The average price is a 50-50 standard deviation, and we are at the weekly average price and below the daily average price. We got up to 38,765 yesterday. Then we reverted, activating a bearish price momentum. It is now trading around the weekly average. We are now waiting for the market to come down to the daily buy one level and activate a bullish price momentum of 36,516 with a target of 40,163. Hello everybody, Patrick here. I wanted to share that latest report, the preview of the latest report that it is basically going to be published at the Associated Press and Seeking Alpha. One of the things that I would like to do here is to take a look at the action that we had basically this morning, where we covered our positions that we came into the market short.
This new drug-free toenail fungus treatment is destroying the foot care market.
And what I would like to share with you here is essentially the signals that were produced. It appears that we did have a major bottom this morning taking place. As we came in here, we saw massive liquidation of stocks, particularly Meta. Old Facebook was down 25%. And I think that what we're looking at is potentially what I believe is capitulation here today. Let's examine for a minute the day trading session that we had this morning. Let's start trading here and see if if we can identify any opportunities here for us to get into a day trade. Once this bloodbath settles down a little bit, I want to take a look at where we are in relation to the data that we use, called the VCPMI, which stands for the Variable Changing Price Momentum Indicator. As you can see here, in taking a look at silver in particular, we've come down to these levels here, making a low of 2202. We're making a low as we speak. And if you noticed where we are in terms of price, we are at a major blue level. Now, the lines on the right here represent the daily signals, and you see the market below B2 level, which indicates that it is extremely oversold. If you look at the weekly and daily numbers, you're looking at an area that is in blue all the way down to 2164, which identifies what it's called the accumulation of inventory, the accumulation of supply. From a mathematical probability, this is where you can begin to see support using conventional technical language. We are oversold into a major area of support. These are pivot points, and the market obviously is way down below this pivot point. So how do we identify a trigger point? Well, first of all, the price is into the zone. So if you are a day trader and you're coming in, you have no position, you want to be looking for the price to cross any of these pivot points. Then that means either coming down to 2164 or getting back up above 2226. A close above 2226 activates a trigger point using the 15-minute bar. So there are no signals right now. We are waiting for the market to do whatever it's going to do in this volatility, and for whatever reason, the price is down where it is. Fundamentally. But applying the VCPMI as a GPS to show you where the signals are activated, I'm waiting on silver for a close above 2226 or 2164. Now, this is for day traders applying the futures contract. What this tells you is the algorithm identifies this area potentially where you're going to see buyers come into the market. The lower it goes into now the weekly, the higher probability. Because it's almost like you could see the price dragging the daily signals into a major weekly signal, which is 2164.
if activated. Depending upon the supply and demand at these levels here, the price either going to come down or it's going to go up above 22.26. And this is the area where I'm looking to enter into a trigger point. In the meantime, we are neutral on silver. Let's take a look at the gold market. The gold market is pretty much in the same situation. Alert. We are in an alert mode here for the gold market either to come down to 1787, which is the daily number, or this signal by reverting above 1810, which was the weekly average, it was the daily average. It activated a bearish price momentum. The initial target was completed. So let's see if the price either comes down to the second target of 1787 or it reverts above from here. So, it's in a neutral zone. And I want to take a look at just where the market is, even for Bitcoin. And then we can take a look at some of the news that came out today that could be affecting as well the market volatility. For Bitcoin, we are trading below the weekly average of 36,510. We are in a choppy area. The average price is a 50-50 standard deviation, and we're trading on the weekly average price below the daily average price. And we got out to 39 here, 38,754. The high here on this move was 38,765. This is just yesterday. And reverted, activating a bearish price momentum, and it's choppying around the weekly average and below the daily. And so my trigger point is basically waiting for the market to either come down to the buy one level daily or activate a bullish price momentum by trading above 36,517, and then we're looking at the weekly targets above 40,163.
Let's take a look at Bitcoin here. It's been trading all day here around the average weekly price of 36,517 and the daily average of 37,400. We are reverting back into this area that is a 50-50 standard deviation. The silver market is trading at 22.42, so we got long down here when we were doing the report earlier this morning, and we completed the target, obviously, of 22.45 for the day. And we took the trade, we took the profit, and we are waiting now for a continuation of this trend, eventually to trade above the weekly of $23 per ounce. We will have today's numbers here in about an hour. gold market had a huge reversal from this morning low. When we did the report here, as you can see, we had a really nice profitable day. And just to leave you with this note that it looks like we have a head and shoulder bottom here. As you can see, the left shoulder, the head, and the right shoulder forming right into a 50-50 standard deviation, which indicates the price could rally if it trades above 1810 all the way up to 1839.